Hello, I'm Stephen Ho, trader and founder of TheStopHunter. Now, something new for you this week. I'm going to take a look at the world's stock markets, dig into what they've been doing over the previous week, and have a look at where they could be going for your trading next week. So I'm going to dig into the technical analysis, come up with some numbers, suggestions, thoughts, ideas for you, to have a look at over the weekend, digest and put into action in your trading plan. So with all that, let's get into this week ahead's analysis. So let's start this week's report with a look at what's been going on, what's been driving the markets. Well, I suppose the big news is the rising potential of interest rates and inflation worries, and that's sort of driven the US markets a bit weak at the start of the year. Also seeing problems over in China, still weak across their stock exchanges, and we had the Evergrande and property debacle that still rumbles on. COVID, Omicron still hanging over us, and Russia-Ukraine tensions still there. On the positive sides, in Europe, the FTSE 100 was pretty strong through December into January, and there's been some positive shoots in emerging market countries and stock exchanges like Vietnam and South Africa. So with that brief analysis, let's dig into some detail. So in this section, I'm going to take a brief look at the majors to see what they've been up to, and I suppose in the longer term, if you look on the top there, the Dow Jones, the S&P, Nasdaq have been trending upwards. It's just been since the start of January, that inflation news, that the prices have pulled back. You can see over in the far east, the Hang Seng, the Nikkei there in the bottom left corner, well, a bit weak, neutral. Hang Seng just starting to put in a bit of a recovery, but could hit some top noise around the 25,500 area. Positive sides, the Nifty there, the Indian stock exchange roaring away over December into January. DAX bottom right corner has been recovering but trading within ranges, and you can see in the top right there, FTSE 100 had a very good Christmas and positive into the new year. So how does this section work? We're looking for relative value, and what do I mean by that? Well, we're looking for indexes with value relative to support and resistant areas and relative to other major indices, either to the up or downside. For example, if an index has been bullish for a while and sells off to obvious support levels, then this is an opportunity to buy the dips. Not guaranteed, but these charts are probably worth keeping a close eye on. And in the top left, we have the Singapore 30 index, the China 50 index after that, then the Nikkei 225, and just want to take you down below that, there's the Kospi, which is the South Korean stock market, and then we've got the Shanghai Composite to the left of that. So you can see 5 of those 8 there are all sort of Asian markets. So things turn around, there's a lot of relative value in there. And if we go to the top right, then we've got the Brazilian stock exchange. It has been coming off quite a lot recently. It looks like it might have bottomed for a return up north. The bottom left there, the Copenhagen 25 index, that's the Danish stock market. Been suffering and going sideways, but looking at all that support around that sort of price level, could be time to bounce up. And finally, a index stock market from the US, the Russell 2000. It's the smallest stocks in the US, can perform quite well, and it looks like again it's possible. It's putting a lot of bottom noise there in the price, so watch out for a possible up rebound. So sticking with the relative value theme here, it's against the S&P 500, which I'm using as my benchmark. Now anything above the S&P 500, which is that black line there in the middle, I would say, is outperforming, and anything below it is underperforming, and therefore better value to be trading versus the S&P 500. And you see down the bottom there, we've got the Chinese indexes, the Hang Seng and the China 50, and then above that, the Nikkei 225. I suppose the real positive one there is the FTSE 100. Still got, possibly another 10% before it catches up with the S&P in terms of growth there. The other ones around there, the European ones and the Nasdaq, falling away slightly and offering a little bit of value, but I think the FTSE 100, if it can continue its forward momentum, is the one to watch there. So in terms of outperformance, then it's the Nifty 50 who's really surging up away from the S&P. So maybe there's a corrective downturn trade to be had, something to think about. So I mentioned in the intro there were some stock markets, despite the negativity around at the moment, which were still really outperforming. And we sort of touched on the India Nifty 50 already, but I said in the introduction the two really to look out for were the Vietnam 30 and the South Africa 40, both really performing very well indeed. Another one I've thrown into the mix there for you is the Austria ASX index, which has been steadily moving up very nicely. But the real, I suppose, takeaway ones there, like I say, Vietnam and South Africa. So this is your roadmap in terms of technical analysis for a week ahead of the stock market indexes. They're the major ones in the table. I've put the rules, the methodology of how I've calculated the numbers below the table. Now, if we work from the left to the right, we've got the current price of the index, and then the S1 and S2 are the down next levels, and the L1, 2, 3 are the up levels. And we've got the 1 week change, the risk return if we want a long trade, and the risk return if we want a short trade, and the overall sentiment of that market. So what can we take from the table? Well, we can see that the Hang Seng is the biggest mover of the week, up 3.79%. The FTSE still holding strong, nearly up 1%. In terms of trades, then to the upside, then the Dow Jones and the Nasdaq 100 have good risk return, 2.65 and 2.25 to 1. To the downside, obviously, with the FTSE growth there, it's looking at 2.75 to 1. And the Hang Seng also, even its week bearish, 1.18 to 1, so that's something worth considering if the price reverses back after its sort of short-term bullish up run it's playing at the moment. Now, not many people factor in seasonality to stock market trading, but those indices are very seasonal, and as you can see from October through December, very strong in terms of stock market bullish growth. And we're now into January, where you can see there's actually not that much happening. The orange colours there are neutral. We can see the Nikkei 225 historically comes off in January and February. FTSE has a bit of a run to mid-January and then, let's say, fades away into mid-February, as does the Swiss SMI index. But as for the others, all pretty neutral, meaning they could move in either direction. Now, each week I'm going to go through an index that I think's worth a look at, has been performing well or not so well, and where it might be heading next. And this week it's the FTSE 100. It has been quite surprising how well the FTSE 100 has actually been performing when you look at the fundamentals. But if we go down into the bottom right hand corner, we have a weekly candlestick chart for the index, and you can actually see that it's grown nearly 60% since that really big pullback when the coronavirus first hit. So it has been steadily growing and very nicely. Now, above that we have the 4 line break chart, again showing a lot of positivity, and to the left of that the CAGI chart set to 35 points, and that gives us a good perspective of the shorter term price action. The modified DMI indicator at the bottom there both is showing bullish, and we can see the price ranging nicely within that channel, just bouncing off, you know, that November December time and pushing up to the sort of recent highs in terms of Fibonacci lines there, numbers. 7139, 7100 seems to be a key area to start with, which I highlighted in yellow, and below that it's down to 6795, you know, 6800 sort of area. But interesting to note that, you know, the price at the moment is just shy of its all-time highs, so it'll be interesting to see how much further it can push on upwards. Now each week I also more closely follow 3 stock indexes: the S&P 500, Nasdaq 100, and from the Far East the Nikkei 225, to give me a good balance of what's going on. I do trade them heavily. So we start with the S&P 500, and what can we take away from the chart? It's the same setup as the FTSE 100 in terms of charts used. On the left hand side we've got, you know, the price slowing down within that channel. Still bullish though in the longer term. If you look at that DMI indicator below that, can it bounce from here and go upwards, push towards that 5,000? Well, we can see in terms of short term point of view, the line break chart top right there is in a bearish holding pattern, and below that we've got the weekly chart for the index, and at the moment the DMI at the bottom there, the red black lines just crossed over to the negative. Has been trading within that pink and blue 2 standard deviation regression trend for a very long time, back to early 2020, and you can just see there's an Ichimoku cloud there showing that the price is still above there. That could mean it could pull back to the 4200s if things got a bit more heated to the downside, but again it's also got some upside within that 2 standard deviation regression band to the 5000 area. Now at the top left is a daily chart of the Heikin Ashi chart of the S&P 500, and it's just showing you that it's trading above its moving average, pull back, so negative short termism there, and with some key Fibonacci numbers for you to take away. But the important part of this page is the other 3 boxes, which give us some more of a sentiment idea. And in the top right we have the 52-week highs, and we can see they're falling, and we've used Kagi chart to do that, and it's showing a bit more sign of negativity if that occurs, you know, moving that way. And in the bottom left there, the S&P 500 stocks greater than the 50 moving average, so the more greater, then the stronger the market. And at the moment it's sort of holding really in the middle there. It's pulling back a bit but holding in the middle. And then in the bottom right we've got the volatility index, so the more volatile the number, the more it pushes on upwards, the more likely the market is to move downwards. There's inverse relationship there, and as we can see, volatility has been moving up, but it's not especially high at the moment, and we'll be looking for a turn of that south to give us more encouragement that the market is about to, you know, reverse back on upwards. Finally, for the S&P 500, a look at the volume profile. That's that yellow and blue bar chart on the right there. Now I've pulled off key numbers and lines there which could prove, you know, key support and resistance zones, and you can see from the bottom it's 4,000, 4,200, 4,400, 4,500, 4,700, where you can see a lot of the noise, activity and the movement in price. So watch out for those levels and build them into your trade management if you're trading the S&P 500. Now onto my favourite index, Nasdaq 100. It's all about the tech stocks here, those big boys that we hear all about. Now it's the same setup as the S&P 500 in terms of charts. In the top left we've got the daily chart, Heikin Ashi. We can see that the DMI there has crossed over negative. We can see that pullback in price, and on top of that some key Fibonacci numbers, levels for you to observe and build into your trading. In the top right, we can see that the Nasdaq 152-week highs has been falling, and in the bottom left there, the stocks greater than the 50 moving average also on the slide. And in terms of volatility, it's been picking up again, nothing spectacular, but that is a negative sign, so we'll look for that to change back downwards if we want to become more positive and bullish. But overall, the Nasdaq 100 there, it's in a sort of a weak bearish state at the moment in the shorter term, and we'll look out for signs for it to return back to that bullish longer term trend. So one of the indexes in the Far East I like to look at is the Nikkei 225. I do mix it up with like the Hang Seng and the China A50, but for this week I'm looking at the Nikkei 225. And on the left hand side, same CAGI setup, 450 points, and we can see that the DMI at the bottom, red's over the black, so it's bearish. But the big takeaway there really is that since beginning of 2021, has really been in a sideways range between say 3,700 and 26,000 sort of area after a great run up from 2020 after a big pullback, similar to the FTSE that we looked at earlier. Now in terms of the 4-line break chart, we're in a current downtrend, so weak bearish at the moment. And if we then head on to the weekly Heikin Ashi chart, we can see a bearish DMI below, red over black. We can see the price moving inside the Ichimoku cloud, signifying a bit more neutrality. And really, it's a bit flat, quiet market there for the Nikkei 225 at the moment. So to round up the Nikkei 225, a quick look at the volume profile. I put on some key numbers there for you to, like I say, build into your trading. 23,500, 26,750 and 29,000. Probably more likely to be the 29,000 to 26,750 that proves more important in the shorter term. But overall for the Nikkei, pretty stale at the moment. So that's it for this week's look at the world's stock markets. Hopefully there's enough ammunition there for you to take this video, that what you've learned here, into your next week's trading, whatever stock market indices you may be trading. And I suppose the takeaway from the week just gone has been a bit bearish. That theme of inflation, interest rates, the COVID still hanging over us and producing, like I say, a more negative outlook. But there has been pockets of positivity. FTSE 100, Vietnam, South Africa, to name a few. So there is some bullishness still around to take advantage of. Now, I'd love to hear your feedback on the video. If you've enjoyed it, let me know. But if you want it changed, adapted, tweaked to your own personal preferences, I'm quite happy to take on board suggestions. Do you want me to look at specific markets in more detail, or would you like me to look at use different charts, indicators? Again, let me know in those comments below. Would love to get your feedback there. Now if you've liked today's video, please give us a thumbs up. Don't forget to hit the subscribe and bell buttons to receive further notification of content I'll be producing just like this. And all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.